Hi, everyone, and welcome back. This is Wade into Wealth. The leaves are finally starting to change here in Western New York.
Did the last cut of the grass this past week.
I know.
Mm-hmm.
I know.
Well,
it's a wonderful thing. No, I don't. I don't have to cut my grass at the moment.
Yep.
But it is a wonderful thing. You get that first frost.
I mean, it is. It's bittersweet because I had to reorganize the garage and move the snowblower to the front and put the lawnmower away. So
you know, it's also nice. No more ticks. Ticks becoming a big issue. If you like being out on the trails or hiking, which
apparently
I do.
If you live in this guy's house.
If you do, I enjoy those things. Ticks, big problem. We got a frost. Knock them all out.
There you go. They're done.
Don't have to worry about that for a few more months.
I'm relieved. I'm relieved for you. I'm relieved for you.
Well, you're not here to join us today, whether you're on YouTube or listening on a podcast, to hear us talk about ticks and frost and lawn mowing, though we're happy to do that if you would like. We are getting closer to the holiday season. Thanksgiving is coming.
I mean, it's almost a couple weeks away.
Just
it's hard to believe.
Weeks away. Yeah. No, to me, we're still in like
and the
mid-September.
65, 70-degree weather is kind of fooling us right now.
Right.
But don't worry, it still gets dark at 5 o'clock.
It does. It does, and it will continue to do so. Mm-hmm. So, in the interest of the upcoming and approaching holidays, we're going to talk today about something that has become more mainstream. If you've bought anything online, you have seen it. Maybe you've used it, but you've probably seen it. We're going to talk today about Buy Now, Pay Later. Mm-hmm. The abbreviation BNPL. But what that is you're on a website and you're buying something. I don't know. What's something you've bought lately?
I bought a new pair of shoelaces for my dress shoes.
So it probably doesn't work with a new pair of shoelaces.
You'd be surprised. I mean, they'd still put up there like small, maybe like a $15 purchase. Feel free to make 4 payments of $4 over the course of the next month.
Well, I can tell you that I know Griffin, your older son, doesn't listen to this podcast, so I can say it here. Griffin's getting a sled for Christmas from Aunt Liz and Uncle Chuck. Mm-hmm. Ordered that sled this past weekend. It's a cool sled. Looks cool. Good color scheme. Yeah. But when I was on the LL Bean website going to make that purchase, Affirm or one of these Afterpay, there was an offer. You could buy this sled or make 4 easy payments of $14.50 or whatever the amount was.
I mean, it's today's version of Layaway.
Right.
From which, in fair, I mean, even Walmart, they no longer offer Layaway. Now it's just this Buy Now, Pay Later option, which I think they call it maybe a point of sale loan.
Sure.
Where you're getting a loan as you're buying this purchase or making this purchase, buying this item. And it's something where it makes sense for some things.
Sure.
$60 sled, maybe not. $15 pair of shoelaces, maybe not. Also, my shoelaces weren't $15.
And that sled wasn't $60.
Yes. Well, there you go.
So there we go.
Good. Excellent. But that's from that. There's so many, and they're going to try to get you into that because they're not just giving you this money for free.
No.
They have a business, and they want to get exposure to you. But we're going to, in a little bit, talk about why that in some instances where it may make sense and perhaps some other instances where it may not. So what are some of the, you've made a couple more online purchases lately, but what were some of the most popular names or entities that were offering the Buy Now, Pay Later?
So Affirm is a big one. I know PayPal offers it. Afterpay is another one. I know that Square has a version of it. I can't remember. I think it was Quad something that Square recently acquired. Yep. So a lot of companies are looking to get into this. MasterCard has a service that is rolling out. A lot of companies are looking to get into this space. Each one has pros and cons and reasons to do it. They can make sense. I've used it. You've used it. We've both used it for various things, and it can make sense if you're making a larger purchase and you just don't necessarily want to shell the money out all at once.
Right.
But there are some keys to doing it, and certainly many things to be aware of. So let's start there. What do we need to be aware of if we are using one of these services?
Every service offers a different benefit. Mm-hmm. It has a different set of pros and cons. Affirm, for example, they tend to be the best for a longer-term purchase. What do I mean by that? I mean, they can give you the Buy Now, Pay Later over the course of 1 month, up to even as long as 48 months or 4 years, with a maximum of $17,500 for basically that line of credit that you're getting there. They market it as being 0%
Sure.
interest, and it very well may be.
In some cases, it is.
But that's going to come down to the length of how long you're borrowing money, the amount, and the merchant that they're working with. Some merchants may not allow just a 0% interest. And so on one end of the spectrum, you may get that as 0% interest for a year, 2 years, but also make sure you're doing your homework because depending on the circumstances of the purchase, the length of the loan and the amount, you may be paying more than 0%, even as high as 30% from an average percentage rate. Annually.
Yeah. It's worth keeping in mind. Every single one of these companies is a for-profit business.
Yeah,
There are
they're
zero,
not doing this because they're nice.
There are zero non-profit businesses in the lending industry.
Yep.
There are not.
Yep.
So keep that in mind. In some way, shape, or form, these companies will be making a profit off of what you're doing. So, like you said, it's important to know the terms. If it's 0%, it reminds me almost of, you'll see the ads in the paper for, a car lease. And it's $199 for, the lease.
Yeah.
And you go and you look and say, okay, well, does anybody actually pay $199 a month?
Only as long as you meet this entire laundry list of criteria.
Right. So there are, the other thing that you have to understand is what happens if you miss a payment.
Yeah.
What happens if you're late with a payment? Now, the best thing to do, and some places will require this, I believe Affirm does. When I used it, they required
to automate the payment.
Me to automate the payment, which to me was great because I don't want to have to think about it. Just take it out, let it happen, let it be.
And from their end, they know they're far more likely to get paid if you automate the payment as opposed to if you have to manually go in and make that payment every month for them.
But not all companies mandate that or require that. And if you miss a payment, the fees can be very high.
Yeah.
They can be very high, up to 50% or 100% of what that payment would be. So that's something to be aware of. You mentioned PayPal as well. PayPal offers this.
Yeah, I think it's pay for 4 or pay in 4.
Yeah.
So while Affirm is great for perhaps a longer term purchase, PayPal is probably ideal for a shorter term purchase where they allow you to make 4 installment payments every 2 weeks over the span of a 6-week period of time. They don't charge you an interest rate off of that. They don't charge you the late payment because I think it has to be automated, similar to Affirm. But they're best used for a shorter term purchase. Maybe it's just a timing issue for having the money to be able to cover that expense, or maybe it's just easier paying it when you get paid every other 2 weeks or every 2 weeks. PayPal offers that best option, but they also know the more that you use their platform, the more transactions will be involved.
Sure.
And that's how they're going to end up making money over a longer term period of time off of each customer.
And the more data they are able to collect off of you.
Yeah.
Which in a lot of these cases is one of the biggest goals of these companies.
Probably not one of, I think. I mean, you look at Facebook and Google, they're advertising their social media, but the reality is they are data collection companies, and that's where a lot of the value for them in terms of making profits ends up resulting.
Or for these companies that have partners that they work with, that that data is being used to target you to get you to spend more money and pay more money to these companies. Let's talk about when you should or should not be using one of these services, because if done right or when appropriate, it can make a lot of sense. It can be a nice little it can be a nice thing to have, especially knowing that you're not paying interest, or you may not be paying interest in some cases. Let's start with when you should maybe consider not using these.
Well, I think it's all going to depend on your own circumstances,
Yes.
first of all, and you have to know yourself. It is probably really easy to look at this, and you can go through and make a whole list of purchases and only pay for maybe a tenth of it in that moment. And so you've got all these things. You think, wow, this barely cost me anything. But the reality is that does cost you on a monthly basis. And that will put extra strain on the monthly budget that you have if you're already operating within pretty tight confines there. So one, know yourself. But I think I would compare it to dessert. Dessert is okay in moderation. So is buy now, pay later. I think in a lot of cases, it probably ends up being best for a larger ticket purchase, that if you can get 0% interest off of that and have it spread out over a year or two, and it's not going to jeopardize your budget and your ability to save money, I think that's something that could end up making a lot of sense.
You have to know yourself, and you also have to know and be able to keep track of where you are.
Right.
If you start with a big ticket purchase, okay, fine. But if then you are buying a pair of sneakers with it, which, by the way, you can. I was just looking at some running shoes the other day, and you can buy these shoes for 4 payments of $49.
It pops up everywhere.
$40 all the time.
Even little things, I think.
Right.
People really do, but they're running a business. I'm sure some people will do that.
But the risk you run there, because it is easy, and it's like this with credit cards, it is easy.
It's a snowball effect.
To buy something, make no or a minimal payment, and think, well, that's only $25 a month. I can handle that. But you do that for 2 things, now it's $50 a month. You do it for 3, it's $75. You do it for 4, it's $100. So all of a sudden, it starts to add up. And in many cases, these companies are not opposed to you doing it more and more and more, because all of a sudden, then the likelihood of a missed payment, extra fees, or you buying something that will have an interest rate attached to it, it all starts to increase the more you do this. So this is, and I love dessert. Believe me, I love dessert. But has to be done in moderation, or it can become a real problem.
Yeah, it can become a runaway train, which can really derail your financial picture if you're not on top of it. And I used Affirm for one purchase. Yeah. And it was very easy to go in. It showed you when the payments were going to be done, how much you had left. So it's easy to track. Just make sure that you're spending the marginal amount of time to stay on top of it, continue to track it so that you know when that's going to come off and when you can stop making those payments and when it'll stop being taken out of your bank account.
I would avoid making it a regular habit.
Yeah, I think do it in moderation.
I would avoid making it a regular habit or a regular thing.
Yeah, I mean, you don't want to, I just finished one and now it's time for another big purchase to do that again. It's just do it in moderation when you can, and don't let it get out of control.
Yeah, interesting to note too. A lot of these, and so where they're different often than a traditional loan, and this is something that we should mention, is that when you typically, I should remember, you're at a baseball game and they offer you the free towel and you get you sign up for a credit card, or a lot of these places they'll offer you interest. We've each done it. You've done it with furniture. I've done it with furniture, where you're at a furniture store, 0% interest, 36 months. You have to open a credit card though, and then now you have. I had an Ashley Furniture credit card for a while.
We all probably have.
Right? We've all had those and that makes a lot of sense too, but this is somewhat different in that in most of these cases, you are not taking out a credit card.
Right.
You're not being issued a credit card. There is typically not a hard credit inquiry put on your credit report, meaning if you are doing these, it's not as if when you go to buy a vehicle or a home and there is a hard inquiry on your credit report. Teaser, we did a podcast a few months ago on credit reports and credit scores. There's more on that there if you'd like to listen to it. But this is what would be called often a soft inquiry, or a lot of these companies have their own.
Some of them don't even report it to the credit bureaus.
They don't, but they have their own methods of determining your ability to make payments or not.
Yeah, absolutely. I mean, they may not report it to the credit bureau, but they certainly are going to understand the risk that they're taking from a business aspect of who they're extending these loans to.
What's interesting, I think, in the future is that this is becoming more of a thing where there are a lot of different ways to have debt that is not traditionally showing up on a credit report, credit score. I'm not saying it's good or bad. I'm interested to see what that looks like, because it's a very archaic system of credit reporting, and it's also how it's done.
It's going to make sure or force you to have to stay on top of this stuff, because if you have credit card bills and you have multiple credit cards and you have multiple buy now, pay later situations, you have to stay on top of it, because otherwise it's gonna get out of control and it's gonna balloon into a much, much bigger problem than it first seemed when you put a little bit of money down to get that purchase done in the first place.
Yeah. So, action items we can take with us today after we leave and return back to our daily lives after listening to this podcast or watching this podcast on YouTube, where you can find it by searching for Wade into Wealth. Although if you're watching it, you've already found it. So
just click subscribe if you haven't already.
Share it with someone else. I would say read and understand what you're getting into.
I think you need to understand the differences between the Affirms, the PayPal, the what was the
Afterpay.
Afterpay.
That's another big one.
They all have different pros and cons, and so understand your circumstances, what kind of purchase you're making, and see which one is probably going to fit the best for you. Don't just paint with broad strokes and assume that one is always the most ideal and the best for you. And certainly be organized about it. Stay on top of it.
And don't lose track of the fact that these are for-profit companies.
Mm-hmm.
It's fine to use them as they're meant to be used in some cases, and you can use them and make good and efficient use of them. But don't lose track of the site. These are for-profit companies. They are not out there to provide you with charity.
And here's the reality. They are convenient. They make a purchase convenient for you. But the thing about convenience is that you have to pay for it.
Either now or later.
Mm-hmm.
I think that's a good place to end. Thanks for being with us. Whether you're on YouTube or listening on podcasts, wherever they're found, we do appreciate you being with us and sharing this journey to financial wellness. We'll be back next week with more Wade into Wealth.